Today we're going to be talking about the 12 candle window and are you on the inside or the outside? Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Middle of the week, we've had some fantastic trends on some of the British pound crosses, but some monster moves on the euro crosses. And I think that's going to continue over the next few days. We've got some European announcements on Thursday for refinancing rates, but again, more news to come later in the calendar this week. But some fantastic moves happening in most of the sessions. So today I've received a lot of emails and questions, and one of the most common questions that keeps coming back is, what do you mean by are you on the inside or on the outside? So today we're going to review that. We're going to talk about day 1, day 2, day 3, and again just looking at some simple understandings about the 12 candle window. A lot of the timings in between the 12 candle windows, we've talked about this before, there are trades in those time frames, but in terms of coming to the market each day with a set time frame to identify potentially selling high opportunities or buying low opportunities, and understanding that they use those timings to either trap traders with a stop hunt and a trap in the wrong direction, or they drag traders into the wrong direction before stop hunting against them and continuing with the trend. Some very basic understandings, and just stepping back and not trying to trade every swing in the market. Most moves will be 25 to 50 pips. If the market is trending or dragging down when we head into the equities open, you can expect at least a 25 to 50 pip move as a stop hunt. Now, some of the traders that have asked me questions regarding that is what you're sort of not understanding completely yet is that sometimes the move off the high or the low in that gap time is actually the stop hunt. And traders are trying to trade that, trying to call the bottom or call the top, and they're trading that. There is a trade there, but often as we head into the next 12 candle window, that may have been the 50 pip move off the bottom or the top for the move back in the opposite direction to continue that trend. So just to review some simple things, the timings: 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m. New York Eastern Standard Time. That first hour will often be a stop hunt or a trap, either to the high or to the low of the day. So in many cases, if it's a stop hunt, it may already have been a 25 pip or a 50 pip move off of the high or the low from the existing move. So when we start our day and we talk about Asia, one of the most important things to identify, if it's a Monday, for example, okay, we may be looking at having a peak formation put in place for a high or a low of the week for the start of the week. We've talked about looking at the initial balance of Monday and Tuesday as our trading range, as the market sets up. Now, in a lot of cases, so for example, this week in the euro pairs and in the pound pairs, they've had trending days. So when we look at Asia, if the market has had a down day yesterday and we head into the next session, if we expected this market was going to reverse, in most cases we'll see a peak formation low form for the reversal back the other way. But if the market goes into consolidation and puts a peak formation in Asia on the upside, you can pretty much count on the fact that you're now going to wait for that range to establish itself and look for a selling high opportunity back with the original trend. Because if they haven't taken out the lower of the day from the previous day, and they haven't put a peak formation in the opposite direction, chances are on day 2 we're going to continue the move down or up, depending on which direction day 1 was. We talked about 3 pushes into a low or 3 pushes into a high. Day 1, day 2 will typically be the day where the markets continue the trend if they put a peak formation in that counter trends the existing previous day's move. Day 2 is a day that will often have trend following traders following those trades because their technicals align for a swing back in the direction of the original move. So when we come to the screen, one of the questions I always ask myself is that, am I getting a sell high opportunity near the high of the day, or am I getting a buy low opportunity near the low of the day? So if I get something that looks like a trade and my fill price is inside, okay, in this area, I'm on the inside. Most of the good trades will come at the low or at the high of a day, regardless if it's a swing trade, regardless if it's a stop hunt back into the trend. And then coming back to that, our 12 candle window. So we have 12 candles, 3 hours, and often that first hour will be a stop hunt into the high, 1, 2, 3 reversal, or a 1, 2 reversal. There may have already been a breakout pullback off the high for a move down. Again, the first thing I always look for is which way is the peak is there a peak formation in Asia? Peak formations. So was there already a 1, 2, 3 in Asia that gave us a high of the day? We may already have the high of the day established as we head into the Europe-London window. If that's the case, we want to be, even if the market's running away, we want to wait for the move back for our sell high signal. Oftentimes, just think in simple terms. If Asia's the high and London opens up down low, London may be it may be trending, but London may create the low of the day. So if that's the case, traders need to understand, if there isn't a low in place and London opens up down here and it takes off, that doesn't mean that that's a trade. It means that we have a low of the day in place and we have a high of the day. If the trend is down, then we're looking for a sell high setup. We're not trying to buy low and buy the low of the day and sell the high of the day just by getting in front of the move. If that first hour drags us lower and the market equity, whether it's the US or London, if the pre-market drags us further away and it opens us counter trend, then often in a lot of cases that is the open of the equity session will be the stop hunt against the trend. We're going to look at some examples on the charts, but I want you to understand something. When Asia trades, which direction, if any, have they put a peak formation in? Is the high of the day maybe in place already? You may have a low and you may have a high, but if they put a peak formation in place, so people say, what's a peak formation? You know, a 1, 2, 3 reversal engulfment. Have they put one on the bottom side? Once Asia is trading, are we inside of a 25 pip box or are we around numbers? If we're around numbers, we use the high and the low. If we're inside of the 25 pip box, wait for this market to either break out or work one side in 3 pushes for a sell high, or again, breakout pullback inside, working it, and then buy low setup. These 25 pip boxes, if the market does move, as we head into the next 12 candle window, every time it goes through, this is 25 pips. If it breaks down, this is the next 25 pip level. So most stop hunts are 25 to 50 pips. People say, oh, it's not a stop hunt, it's liquidity, it's this and that. It doesn't matter. Call it whatever you want. But they're going to clear orders. They're going to fill orders. They're going to move into profitable traders. They're going to come back. If they stretch it 50 to 75 pips away, they're going to come back and get the guy who got in at the open of the 12 candle window later. They'll get him in the US. How do you know that? Because you're going to see pins on the bottom. If you don't see pins, and the market pulls back up in 3 pushes as we head into the US Open, and they go 1, 2, 3, guess where they're going? Remember the golden rule. Where's the money? Look at the end of the day. Look at your previous day's charts and look at what happens at the end of every day. They pull it back into consolidation, and then Asia or London the next day will have hit the stops on the previous profitable traders. And if the market is in a trending trade and we get to day 3, So day 3 typically will be taking us even further in line with the technicals, with the trend, further away. It looks like it's running away. Traders think they've missed the boat. We have the euro refinancing rate coming tomorrow, so we're either going to get a massive stop hunt back into the trend for a reset and a continuation of the trend, or that market is going to be trapping traders up high for the move back down after the financing rate or into the financing rate announcement, and Friday could be a reversal. If we get a peak formation stop hunt with the refinancing rate, we could see Friday continue the trend in the long direction. So stepping back, and one of the ways that we can tell that is by using the 12 candle window, because the first hour, if we're on the outside, if we're up high or down low, they could be taking traders further away. The equity markets will stop hunt back against the trend, or it will consolidate and work the high for a reversal, or work the low for a buy low setup. If the market stop hunts down against the trend in that first hour and drags traders down lower in the uptrend, we can expect that we'll possibly have a buy low signal to continue with that long move. So when that first hour trades, if they take you further away, or if you're inside, I wait until they go back to the high or to the low. If we are at the high, I'm looking to sell high. If we're down low, I'm looking to buy low. But if I'm buying low in a downtrend, I can expect that the open of that equity session giving me a buy low signal is potentially me counter trending the main trend, and they're trapping traders in the wrong direction for a measured move to continue the trend in the original direction. We'll take a look at some examples, but again, thank you for the great comments and the feedback. One thing to remember today: are you on the inside or the outside? Are you up? Are you at the extremes, or are you inside? If you're inside, you can expect in that dead zone that the closer we get to the 12 candle window, that at some point they're going to be hitting the high or hitting the low. So I'm not talking about being in an existing trade. I'm talking about as we head into the 12 candle window. Most moves will be 25 to 50 pips. If you get to a 25 pip level and that market is not, it's trading through it, you can expect that market will continue at least another 25, if not 50 pips, depending on the timings of where you're at. But if you're heading into the 12 candle window and that market is inside of a 25 pip box, it's going to go to the high or to the low to trigger traders either in the right direction, selling high or buying low, or trapping them in the wrong direction before the second hour will shift the market and move in the original trend that the market makers want to move it into. So let's look at some examples. Keep it simple. It's the middle of the week. Stick to your trading process. Keep getting better every single day. Are you on the inside or the outside? Have a great day, traders, and may the markets go with you.
Good day, traders. Continuing our discussion, are we on the inside or are we on the outside? Looking at our 12 candle window, looking at our Monday, Tuesday trading range, and looking at peak formations in each session, especially Asia, as a possible indication of our directional bias, and also just using the 25 pip increments to understand pullbacks and continuations and stop hunts. So when we look at our British pound Canadian, just to start with, we can see on Monday, just blow this up, zoom in. We had a peak formation from Friday. We had a peak formation low from Friday from the US session. The market traded sideways within the 25 pip box. As we head into the Asian 12 candle window, the market hits the high of the day, 3 pushes before dropping down with an engulfment. This is before we've come to the screen in the Europe session. Takes out the high-low on the engulfment to give us our our double top M structure 3-push pattern. We have our low of the day, we have the low of Asia, and we have the low of the day. And we've talked about the 3 types of M&W formations, the type 1, the type 2, type 3. Type 1 is typically 25 to 50 pips above the box, or above the 25 pip Asian zone. Type 2 will be at the high of the day or the low of the day. And type 3 will usually be a low of the day M formation for a sell continuation, or a buy high W formation at the high of the day for a continuation after a peak formation has been put in place. Before we come to our Europe 12 candle window, we have a possible peak formation in place. We have an engulfment. We have a second engulfment establishing a high of the day. We have our low of the day, which is the low of where the session began. But we're talking about peak formation. So we have a peak formation on Friday, and we have a peak formation on Friday's high. We'll just zoom in on this. So this area is a peak formation. Why? Because that's where the market reversed off of with engulfments. And we had a peak formation low. Why is this a peak formation low? Because this is where the market reversed on engulfments with pins to head back in the other direction. So we have our real high and our real low, and the market pulls back inside. This is a 75 pip range. The market pulls inside. Do you notice this is in the middle of the range? Then in Asia, they work the high of the day 3 times before engulfing it, establishing a peak formation. I'll just zoom in on that as well. In a 25 pip Asian range, peak formation. So this being the case, as the market drops down and goes into consolidation underneath of the numbers at the top of the 25 pip box, our first hour typically will be a stop hunt, trap, or trade. Now, if this is the peak formation, this is where traders need to understand this pullback, these first 3 candles, is the stop hunt into the existing short trade. We get an engulfment short on the last candle of the first hour, meaning that we're looking for an open drive at the beginning of the equities hour at the London open drive. The market hits the low of the day. We go to break even when a low. I go to break even when a low or a high is broken. But we also now have geometry. This is a rectangle. We have a 25 pip rectangle. We put our measuring tool on there, which is just 100 pip expanses, which is basically, if this is a 25 pip box, so forget about the high and the low, just look at the numbers. That's going to be a 50 pip box target. The market comes down, takes out the US session low, but also takes out the low of the Asian range. Now the next question we have is that when we head into our next 12 candle window, are they down low or up high? So we have a swing low and we have a swing high. Well, clearly, when the market opens in the 12 candle window, we're down low. First candle is a trap, taking traders chasing the trade. They pin the bottom before coming back 1, 2, 3, hitting it a second time, and reversing with an engulfment. There's our W formation for our low in the US session. Now this market broke out, pulled back, and continued into the high of the day. Traders wouldn't have got 50 pips, but the point is that you're buying low. So I want you to understand something. Asia put in a high of the day. London was in the middle of the range. And then the US session put in the low of the day. So high of the day, low of the day. And we're talking about 25 to 50 pips of movement. The ADR ends up being about 100 pips total from top to bottom. And we head into the next session. So if this is day 1 and it's a down day and we are expecting day 2 to either continue the trend or put a peak formation reversal in to reverse the trend back towards Monday's high. The market trades sideways inside of a 25 pip box. And as we head into the end of the Asian session, the market has put in a low of the day. And we'll just mark this off. Okay, they've put in a low of the day, and the market has also put in a high of the day. The market gives an engulfment at the high of the day, and it stays up there as we head into the 12 candle window. And on the first candle, what does it do? It continues the downward movement. There's no peak formation, low, reversing or flipping the book. The market breaks out, pulls back, continues down. So the London Open in this particular case dragged traders lower before stop hunting back up into the move, which again, we're in the next 25 pip box. It hits underneath of the box, breakout pullback, continuation, second push, third push down, and we're in the bottom of the box now. And you'll notice that they're buying it up off the box. But what do we get in the beginning of the US session 12 candle window? So we have our low of the day, which again, we know there's dollar signs down here. And we'll just put in a little dollar sign so traders understand that that's where the money is. And when they pull it back on the inside of the high and the low, so we redraw the most recent high, which would be the last swing prior to the US session 12 candle window, and they go 1, 2, 3 engulfment with a pin at the high of the day for the stop hunt measured move down to the low of the day. Okay, and again, we're looking at this candle that breaks out, and then the equities open takes traders further away, trapping them down low, and then exploding back up inside of the box. On a smaller time frame, this would be our double bottom reversal. And where do they go? Not only to the high of the US session, they take it right back through the high of the day. Asia puts in the high, US session puts in the low, London is in the middle. They pulled it back inside, trapping traders inside of the high and the low, 1, 2, 3 to the high, and then moving it through the low and reversing the market, pulling it back inside, and we now have a possible peak formation low for possibly the day, maybe the week. We're inside of Monday's peak formation high. The Asian session has put a peak formation low in, but we may end up breaking one of these as we head into our Europe London 12 candle window in the next couple of hours. We have our low. The market is trading inside of yesterday's high, squeezed in there in a nice tight consolidation, so we could get a stop hunt or a breakout or a stop hunt to the top side and a downside, and then a continuation. So we possibly have a low of the week in place, and Monday's peak formation high could be the high of the week. We're inside at the moment. We have a tight consolidation. We wait for the market to either break out, pull back and continue, or stop hunt high, stop hunt low and continue, or hit the high and shift and retest the low of the week. So each time we want to look at how many boxes are we in. Right now we're in a 25 pip box and they're working the high of that box. We would want to see this break through and pull back to continue that move long, or break through the low for a move off the bottom of the box and a continuation, or a breakdown, pullback, and a follow through to the low of the week. But right now we're inside. There are stops above the high of the day and above the low of the day. We'll look at the euro real quickly as well. Great. The market has trended strongly off of Friday's peak formation low. Again, we talked about this last week. Thursday was the peak formation high. When we zoom in on Monday, the market opened up inside of Friday's peak formation low, put a high of the day in place. They hit it a second time, hit it a third time in the Europe London 12 candle window before trapping traders on the inside on the London Open and then hitting the low. And we'll zoom in on this. They hit the stops up top, they hit the stops down low, and then they gave us the shortened W formation with the pin hammer and the break of the middle structure for the measured move through the high of the day. This is a fantastic example of a stop hunt or a pullback of 25 to 50 pips. The market has a tight consolidation as we head into the Europe 12 candle window. We are below the 25 pip pullback zone from the high of the previous day. The market in the first candle of the 12 candle window hits the swing high, consolidating, and then 1, 2, 3, 4 to the low at the London Open. Inside bar, smaller bar pins the high of the low bear candle. The next candle engulfs it, and then the second candle of the third hour is a inside bar hammer, bull hammer for the explosive move back through the high of the day, and the first candle of that 3 hour gap time in between gives us a bullpen hammer to continue the move. My point is this: 25 to 50 pips pullback. The original move was up, breakout pullback, stop hunt low, trend. Keep it simple, traders. 25 to 50 pips. Peak formations day 1, day 2, day 3. We could be getting pulled up higher as we head into today's session in Europe. This trend continued higher before pulling back after breaking through yesterday's high of the day. No news scheduled on today's for the euro, but we do have the euro refinancing tomorrow, and we currently have a market that's making new highs. So we could see this market drag traders or trap traders down low back into yesterday's trade for a continuation, or they could work the high, and pull it back in. Right now, we're currently inside of the swing low and the high of the day. Made new highs. It'll be interesting to see how we trade this today, but we could see this market creep down for a continuation up through the high of the day. Have a great session, traders. Keep it simple, and may the markets
Hi,
go
traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.